this is just the beginning.
Hi, and welcome to another Axios live event, whether you're joining us on Twitter or on Facebook or through Axios.com. And today we're going to be talking about the financial future for millennials, particularly in this COVID-19 age. A huge thanks to our sponsor, SoFi, without whom we couldn't do any of this. And please be sure to follow along live, hashtag Axios events. Again, today's show will be 4 segments, 30 minutes long. And we're going to be focusing on how millennials are dealing with COVID, kind of this incredible increase in how many of them are trading stocks. And we're going to start out today, and I'm incredibly pleased to be joined by Lauryn Williams.
Well, good afternoon.
Hey, good. How are you, Lauryn? For those who don't know you, you run Worth Winning, which provides financial advice, particularly millennials. You're also one of very, very few people who has medaled not only in the Winter Olympic Games, but also in the Summer Olympic Games. So, Lauryn, let me start with kind of this big picture question, which is, from your perspective, when it comes to finances, have millennials felt the last couple months has been a major shock to the system? Or is this a fairly jaded generation who just kind of rolls with the punches no matter what may come?
While we are able to roll with the punches, we are definitely not oblivious to what's happened. You know, we think back to 2008, we were just coming of age at that time as millennials. And so we know we saw our parents suffer through that time. And we're not out of the not knowing what it's like to experience something really big and something that, you know, affects the global economy. So we're afraid, but we're also, you know, able to say we're able to bounce back and be resilient in this time.
Let's talk, you know, when we think about millennials and we think about finances, the big thing that always gets talked about most is student debt and just the incredible level of indebtedness that people have coming out of college or even graduate school. Can you talk a bit about what we've seen over the last couple months when it comes to debt? Obviously, certain students aren't in school right now or doing so virtually. Are you seeing kind of give me big picture what you're seeing right now when it comes to student debt picture?
Well, lots of my clients are doing the happy dance because with federal loans, we've seen student loan debt go to 0% interest and also $0 payment. So it's been a huge relief, even if you have not lost your income, to not have to worry about your student loans and to know that you're still getting qualifying credit for either public service or taxable forgiveness if that's something you're going for. But it's also given those with the income to be able to do so an opportunity to pay down and pay down at an interest-free rate. So with student loans, people are very, very excited to be able to take advantage of this opportunity, but they're also thinking now, you know, ahead to the elections and saying, how can we get more situations like this so that we can feel like we have a better handle on our student loan debt?
On those payments and kind of those deferrals, but that ends, right? Kind of end of September. Am I correct?
Yeah, right now it's scheduled to end at the end of September. There has been some talk that it might be extended, and a lot of people are crossing their fingers, hoping that that is true. And then those that have private loans that are still in a repayment plan right now that are not getting that relief are kind of sometimes wishing they had federal loans, but maybe also being able to take advantage of, like I said, if they didn't lose their income, really getting aggressive about debt pay down right now and maybe also doing that happy dance.
I'm curious, for those who are in that situation where it expires on June 30th, and as you said, hoping for an extension, but since that's an unknown, what are you advising people in that situation in terms of how they should be planning for that?
Well, yeah, there's a lot of uncertainty in our future. And I think one of the things we're worried about as millennials is, you know, the long-term economic impact of what's happened over the last few months. And so how do we plan accordingly? Do you have your emergency fund set up and ready to go? Where do I, direct my cash flow? So September 30th, the federal payment is going to stop, but, can I have had my loans paid down by that point, or can I have built an emergency fund by now? We're also seeing tons of people jumping into the market because they're saying, "Oh, things are down. Maybe this is a good opportunity for me to be able to do that and start investing and start getting ready for my future." So if you don't know what's going to happen in September, then most people are kind of stockpiling money to make sure that they have it available for the uncertainty, as opposed to paying down debt because you can't get that money back.
You mentioned a lot of people are going to the market. The numbers, the Robinhood trading numbers, for example, are through the roof in terms of new brokerage accounts. Does that scare you?
It doesn't scare me. The thing that I think is kind of pivotal is, people are wanting to do the right thing, and they're taking advantage of the time to be able to do the right thing. As I want to invest, I want to save for my future. I do worry a little bit. Like you said, do you have an emergency fund? Have you thought about the other things that you need to be saving for? Your regular 401k or your whatever is available via your employer. Are you taking care of those things and truly optimizing your finances, or are you doing what's trendy? We don't think that investing in and of itself is a bad thing. So yeah, I'm not too scared about it.
You've used the term emergency fund a couple of times. Can you unpack that a little bit for me? How do you define at least the parameters of how large an emergency fund should be? And also, how prevalent are they? How common is it that a millennial often has what you term an emergency fund?
Yeah, emergency funds are, kind of popular terms, but they're also not being used as adequately as they could be. So for me, an emergency fund is 3 months of take-home pay. If you are at a stable and regular job, if you have children, you want to extend that out a little bit further, getting closer to 6 months. And if you're an entrepreneur, pie in the sky for you is to have at least 6 months for both business and personal. And it's income, not expenses. So a lot of the things you'll read online will say, do 3 months of expenses. That'll just give you the bare bones minimum. But you want to be able to have 3 months of income so that you have a lot more wiggle room.
Lauren, final question for you is there's lots of talk about kind of a phase 4 stimulus and what might be in that. Maybe they'll continue the kind of unemployment on steroids. Maybe there'll be a new PPP. Maybe there will be stuff with student loans. If you were queen of the country, I guess is the best way to say it, what would be the one thing you would want included in there to help millennials with their financial future?
I want something that gives them access to financial literacy. Like you said, people are jumping in, doing Robinhood, doing all sorts of different things. But, are you doing something that's going to optimize your financial future? And what's going to give you the tools to be able to go in the right direction? So we want to be able to get access to, if there's government resources. I know the CBP is a really good option to be able to say, like, okay, well, what do I do with this money? How do I optimize my finances during this time? And giving them access to good advice and kind of sweeping out the people that are giving bad advice. Because we know there are people that are capitalizing right now on not having done this correctly.
Lauryn, thank you so much for joining us.
Thank you for having me, Dan.
And now we're going to shoot over to Axios CEO Jim Vandehei speaking with SoFi CEO Anthony Noto.
Thank you, Dan. And thank you again to everyone who's tuning in for this important discussion. Thank you to SoFi for making it possible. It is now my pleasure to have a conversation with Anthony Noto, who is the CEO of SoFi. SoFi was just named the 8th company on the list of the 50 disruptors. Explain to the viewers what SoFi is and who are you actually disrupting?
Thank you, Jim, and thanks for having us on. SoFi is a personal finance company. We have a full suite of products that allow you from your phone to borrow money, whether it's buying a house, paying for college, refinancing your college loan. We also allow you to spend and pay through a product called SoFi Money, which on your phone you can provide direct deposit into your account. You get an ATM and debit card. You can pay bills via your phone. You could pay your friends via your phone, and we'll even send a check for you via SoFi Money. And then we also have the ability to invest through SoFi Brokerage, which is the ability to invest in stocks without commissions, ETFs, as well as robo and cryptocurrency. And then we provide a marketplace for insurance. So essentially, we're helping you get your money right by helping you borrow better, save better, spend better, and protect better, all on your phone, all accessible with no fees in many cases.
And who are you disrupting? Like, what companies should be worried about you?
Yeah, what I'd say is we always put the member at the center of what we're doing as opposed to traditional terms for banking or checking or those types of things. So we're replacing the choices any individual has to borrow, save, spend, invest, or protect. And we focus on those activities that the member thinks about as opposed to business models or companies.
And we had a conversation the other day about the trends that you're seeing. You obviously have amazing visibility into millennials, into Generation Z, into how people are saving, banking, investing. What's the most fascinating trend that you're seeing?
Well, first and foremost is it's obviously an unprecedented time, and it's created great challenges for many people throughout the country. Members, high achievers, for the first time in their lives, are making no money, whether they're doctors or lawyers or beauticians or plumbers or entrepreneurs or small business owners. For the first time in their lives, at no fault of their own, they have no income. And so they're starting to build for their financial future. They're doing things like investing. They're doing things like refinancing their debt. They're doing things like refinancing credit card debt into lower cost term debt or refinancing their house. And so there's a wake up call that basically says, I can now lose my income overnight at no fault of my own. So how do I plan for that in the future? How do I make sure I have access to all of my financial product needs as opposed to having to go to a physical bank? And so we're seeing behavior of people rebuilding their future, but also a secular acceleration in investing and usage of digital products from people before that hadn't downloaded their mobile as it relates to products and services for the financial industry.
And is there more investing, especially among millennials? Is there less? Like, what is the pace that you're seeing?
We've seen a 150% increase of the number of people that have opened invest accounts with us since January 1st. We were the first large company to offer what we call fractional shares, the ability to buy $1 of Amazon instead of having to buy one share of Amazon, which is over $2,000. In addition to that, we launched 4 ETFs, exchange traded funds, 2 of which started at $10, but gave you access to a diversified portfolio of over 500 stocks. So these types of products made it investing more accessible. And if you want to reach financial independence, you absolutely need to start investing in your 20s. You need to invest and not be a day trader. Invest in broad diversification, do cost averaging, don't try to do market timing, and be very long-term focused.
Are you seeing more of that? There's definitely been a lot of stories about people essentially turning from gambling to the stock market, a huge uptick in the number of people who are moving through the market. Are you seeing like your base, are they basically investing short term, or do you see people actually, no, I think I have to start thinking about my retirement, think about that emergency fund that Dan was just talking about in his conversation? Do you have a sense of which one it is?
Sure. We're critically focused on making sure that we educate investors. We provide free certified financial planning advice, which you can sign up for from your phone and have a live conversation with a CFP. We are not seeing people day trading. What we are is people investing. A good stat is that we have less than 1% of our members that are doing more than one trade a day. And so the percentage of people that are doing a lot of trades is less than 1% on SoFi. And so people are, in fact, investing for the long term and looking at diversified portfolio. We're not seeing a high percentage of people doing 5, 7, 10 trades a day. That's not the case with SoFi. And we attribute a lot of that to our approach of educating them and giving them more than products, not just free certified financial planning advice, but also free virtual education events they can sign up for either on demand or live.
And you're a disruptor as a company. You think a lot about this space. What are the next areas for disruption in the area that you're in? What do you think will be the next big trend?
Yeah, we're making significant investments in our payments platform. We recently acquired Galileo Financial Technologies. That gives us an ability to really innovate on the front end and do things that are very unique from a payment standpoint, helping people get their paychecks earlier, making it one click to switch your direct deposit, allowing you to invest at a much faster and more diversified way. It also allows us to go international into LATAM and into Asia. We recently acquired a company in Hong Kong called 8 Securities, and we've launched SoFi Hong Kong. We're starting with brokerage in Hong Kong. Again, no cost trading in addition to having robo-advisory. And so the biggest initiatives for us are investing more in technology so we can do things faster in a more diversified way, and then geographic expansion.
Awesome. Thank you very much, Anthony, for this conversation. Thank you to SoFi for making the broader conversation possible today. And now over to Sarah Fisher, who covers media trends for us. She had the chance to catch up with the CEO and founder of WeWoreWhat.
Thank you, Jim.
Thank you so much, Jim. Our next guest is WeWoreWhat founder, Danielle Bernstein, who's joining us live from New York. Danielle, thank you so much for taking some time today.
Thanks for having me.
We know you've had a busy morning. You launched your line today with Macy's. We just wanted to pick your brain and hear a little bit about how that went.
Yeah, we launched the summer collection of Danielle Bernstein with Macy's this morning, and it blew away our expectations, especially during this time. And we are so happy with the sales. We actually, I think, made Macy's history this morning with a certain volume of sales in such a short amount of time.
Wow, that's very impressive. And we appreciate you taking some time given your hectic day. I wonder, it's so tough to launch a business in any setting, but right now we're in the middle of a pandemic. Like, talk to us about what that means to be not only launching your business right now, but to be continuing your business when so many people are suffering from this pandemic.
So I think throughout the entire pandemic, I've had to sort of pivot my business to be extremely meaningful and purposeful. So with every product launch, we've tied it to a give back initiative, whether we are donating 20,000 masks to help Mask a Hero, or raising over $50,000 for the Food Bank of New York, or helping out the River Fund. Every product launch that I've put out there has been tied to an amazing organization. And it's really helped for my community to feel closer to me, but also the product, and to feel better about their purchases right now.
And you launched something called WeGaveWhat. Can you explain a little bit about that?
Yeah, so WeGaveWhat is basically an extension of all of these give backs that I've been doing since the pandemic started. And it's really my way of continuing these give back initiatives past the pandemic. So it's the nonprofit charitable arm of WeWoreWhat that's really part of this newfound sense of responsibility that I feel to give back to my community in a bigger and better way than ever before.
We had an audience member ask us a question, which was, do you think that this pandemic has impacted consumer spend? They might not have as much expendable income, particularly millennials. Are you finding that? And if so, how are you addressing it?
So in my personal business, we haven't seen a huge hit. And I think that's because there is give backs tied to every product that you're buying. And I think that customers are really smart right now, and they want to support these direct to consumer businesses that are tied to these amazing companies and organizations that are helping people most right now. So if they are going to spend their money, which it is less, then they do want to spend it in a way that will also give back.
I love that you mentioned the direct to consumer business, because every business that's DTC usually finds a platform that really works with them. You have a 2 million plus following on Instagram. How did you choose which platforms you're going to place your bets on? And are there any other platforms out there, TikTok is up and coming, Snapchat, et cetera, that you think are really good for young entrepreneurs?
Yeah, so Instagram is still my main platform and focus, but TikTok is a great way to reach a new audience. It's not something that I've personally invested a lot of time into, but it's definitely a great way to reach that younger demographic.
And when it comes to your massive following on Instagram, how did you curate that? To my knowledge, it was completely organic, right? There was no paid media to boost that audience. How were you able to do that?
Listen, my following is the product of organic growth over the past 10 years. So this didn't happen overnight. I've really been building this trusting, long-lasting relationship with my followers for 10 years now.
And when it comes to building that sort of trusted relationship, there's so many opportunities that are being thrown at you to help boost it. I mean, people like us that want to interview you, people that want to have you on stages, new social platforms, and stores that want partnerships. How do you, as a young entrepreneur, place your bets and make these decisions?
I think it's important to just remain authentic. I think learning how to say no has been one of the hardest parts of my career in order to really remain true to myself and what I believe in and the products that I want to promote. If I don't actually use a product or like it, I won't just get paid to promote it. And I think that's what helps influencers with longevity in a space that's, quite frankly, really oversaturated right now.
I agree about the authenticity. When it comes to your particular business, you worked hard to grow something organically, but now you're at the stage of sort of maturation. You have a deal with Macy's. You have a huge online following. Are you considering bringing in outside capital or growing the business in a new way now that you've reached this milestone? Or do you want to continue to just be sort of an organically grown business?
So I definitely keep reinvesting myself into my own business, but I don't necessarily have the need for outside capital right now. I have my tech company, Moassist, that has outside capital, and that's a project management platform that we built for the influencer space. And then I have my brands that I'll continue to grow, but not take outside capital for. I am doing a ton of equity and advisory deals with other brands right now that I would normally get paid for sponsored posts. and coming on as this advisor to help them with everything from rebranding to marketing to social media strategy, and really investing. And I like to call it marrying these brands, because we're really investing in each other for the long term. And I find that those deals tend to be more lucrative in the end.
You have your hand in so many things. We had an audience question that came in that said, how are you able to distinguish your particular fashion brand from all of the other fashion brands that are launching, especially right now during COVID when e-commerce is so hot?
I think I design for me and for my customers. So a lot of my followers feel really invested in the designs that I put out there. I walk them through every step of the process, from the beginning of the sketches to the actual fittings to the behind the scenes of the photo shoots. And they just feel a lot more connected to my product because I take them on that behind the scenes journey. And, you know, I just design products that they want and need in their wardrobe.
It really touches back on that sense of authenticity. Daniel Bernstein, thank you so much for joining us today. We're now going to toss it over to Dan Primack, who had the chance to catch up with the co-founder and CEO of NerdWallet, Tim Chen. Thank you.
Thank you so much.
Thanks, Sarah. And I'm pleased now to be joined by Tim Chen, the founder and CEO of NerdWallet, who is joining us today from San Francisco. Hey, Tim.
Hey, thanks for having me, Dan.
So, Tim, let's start here. The last 3 months, what, if anything, is the biggest change you have seen in millennial behavior when it comes to financial services and their own financial well-being since the pandemic began?
Yeah, Dan, we actually have a great perspective on that because 100 million Americans come to our site every year looking for money help, right? So we've seen a pickup in 3 areas. It's really unemployment, investing, and refinance. And, you know, with respect to unemployment, it's really around how do I take advantage of some of the stimulus programs out there? Now, both self-employed and independent contractors now qualify. And there's an extra $600 a week through the end of July. And there's an extension of these programs for up to 39 weeks in many states. So it's definitely something people care about. The other big one has been investing. The markets have been extremely volatile. And we saw more brokerage accounts opened through NerdWallet in March and April than we thought we would see the entire year. So we think that millennials who have been missing out on stocks going up and up the last 10 years are seeing a great chance to get in. And lastly, just refinancing. The rule of thumb that we our house view is that when mortgage rates drop 0.75 of a point, it's a good time to consider refinancing. So the average American mortgage holder would save about $1,800 a year on a 0.75 point drop. So people are definitely checking in and trying to take advantage there as well.
Can we combine we'll get to refis in a minute, but the first 2 things you mentioned, which were, people paying much more attention to unemployment benefits. Obviously, lots of people have lost their jobs, and there is the added, as you call it, kind of unemployment on steroids, and then the brokerage accounts. Can you merge those together? Because normally it would seem that when someone, say, loses their job, starting to buy stocks is not what they do.
Yeah, that's right. I think there is a lot of speculation out there as to what exactly is driving this. I do think that we saw a lot of retail money come into the market, especially in March and April. Some people have speculated that it's partly driven by stimulus checks or other, surges of cash. But I would really caution that people should really think about low-cost index investing and getting your 401k match first. And I'm a little bit concerned, frankly, by some of the behavior I see around people buying individual stocks or options or cryptocurrencies, especially using leverage. That's just really gambling, and you should only do that with money you can afford to lose.
Tim, on the refi side, one of the big surprises to me about kind of the COVID economy has been that home sales haven't fallen off. I thought fewer people would put homes on the market out of fear there'd be no buyers, and fewer people would buy just out of fear they might lose their job after they get the house. Do you have a basic theory on why that number seems to be not just stable, but rising?
Yeah, so I do have a theory. We've seen record traffic to places on our website, helping people understand how to finance and purchase new homes. And I think a big driver of that is lowest interest rates we've seen in a long time. A lot of people are thinking about moving out of the city. And so there are forces that are driving that change.
I'm curious, one of the call it cliches about millennials when it comes to financial services is that they have a lot more credit cards than their parents did, let alone their grandparents did. And not that they're necessarily in more credit card debt, but they're much more interested in loyalty points, et cetera. Have we seen a continuation of that trend since the pandemic, or has that slowed down?
So travel credit card search has been one of the big areas we've seen slow down. I mean, that's off dramatically. I think especially in the summer travel months, as people are pushing back vacation plans, we've seen a lot less impetus to rack up those miles and points. So that's definitely a big trend recently.
Tim, I'm wondering, as a piece of that, do you expect that that's going to come back? Do you see any green shoots? You hear from travel companies, Airbnb, some hotels, airlines, that travel is slowly rebounding. Are you seeing that rebound?
We are not really seeing that rebound yet. I mean, it's come up a little bit off the bottom, but I think it's really going to come down to when people feel comfortable taking these international trips, especially when we're thinking about the points and miles and where you get the most use.
Tim, final question for you. Obviously, when it comes to millennials and it comes to issues of debt, the big thing that gets talked about constantly is student debt. And being a student, particularly a college student right now, is a very strange thing. Some students aren't going to go back in the fall. Some people got room and board reimbursed. Some people didn't. With that, do you expect that, given where we are, is the overall student debt burden going to go down at all because of COVID, just because we have less people in institutions, or not really?
Yeah, I mean, so this is a personal opinion, but I think we are going to have to really reevaluate why higher education is so expensive, especially as these classes are moving to the digital format. I think on NerdWallet, we see a lot of people taking advantage of student loan forbearance programs right now. And so actually interest in student loan refinance has really dropped a lot for us. I think as a society, we really need to think hard about that problem.
Actually, I lied. I have one more for you, which is an entrepreneurship question. Are you, there's two schools of thought when it comes to financial crises. One is, if you're going to start a business, you might as well do it now because you don't have a job somewhere else. The other is, it's going to be hard to get financing, let alone customers. Has there been an uptick that you guys have seen in terms of millennials, at least inquiring is the wrong word, but at least starting to explore starting a new business?
Yeah, I think so. And look, NerdWallet was started in 2009 in the depths of the great financial crisis. And I totally ascribe to that school of thought. You have less competition. It costs less to get started. It costs less to do your marketing. And you have less of an opportunity cost in terms of working other jobs. So it's a great time to start a company. And we're seeing that reflected in parts of our site like small business lending and things like that.
Tim Chen, founder and CEO of NerdWallet. Thanks so much for joining us.
All right. Thank you, Dan.
And now we're going to do the final segment of today's program, which is the Why It Matters Q&A segment. And I want to bring back in Axios media reporter Sarah Fisher. Hey, Sarah.
Hey, Dan.
Hey, so Sarah, let's start with the obvious here. You are a millennial. I am very much not one. So I'm curious, you talk a lot about news literacy because you're a media reporter. Can you give me a sense from your perspective on what the financial literacy is of millennials? Lauryn talked at the beginning about how she thought that was really important.
Lauryn's right. It is really important. And I think the parallel between news literacy and financial literacy is that neither are coming of age for the digital era. We talked about earlier that there were times where people would go to home ed classes. They learn how to balance a checkbook, a physical checkbook. But in the digital era, finance is so different. Schools these days are not necessarily teaching kids how do you trade stocks? How do you balance your 401k online? And because of that, I think you have a lot of young people in my generation, as you mentioned, who are walking into the digital financial era without enough literacy of how to handle it.
I wonder, is that something you think that is particular to millennials? Because anybody who's, say, over 40, you talk about, balancing your 401k on a website. That's not something anyone under 40 had ever tried to do before. They didn't have a website to try to balance it on. But shouldn't millennials almost be better off when it comes to this? Maybe missing some of the base financial literacy, but much better at digital literacy?
Not necessarily. There's been a lot of data that shows that millennials aren't even that much better at discerning real news from fake news online because people, regardless of your age, feel overwhelmed by information. And I would say the same thing applies to financial information. Just because you're a millennial doesn't mean that you have the skills needed to be able to discern what is accurate financial advice from inaccurate financial advice amid the sea of information that you can get online. I, in fact, think that in some ways, millennials are more susceptible to it because of their young age. They're not necessarily thinking long term about financial advice, and so they're not actively seeking correct information. As somebody who's a little bit older and more established in their career, maybe thinking about things like long-term financial planning, retirement, and life insurance.
Sarah, thank you very much. And thank everybody for joining into this live virtual conversation today. If you enjoyed this and would like more Axios content, please go to signup.axios.com for our newsletters. And also, we have 2 new podcasts, one a daily afternoon show called Axios Recap, hosted by yours truly, and a new show called Axios Today, which begins this coming Monday. You can get them both at axios.com or Apple Podcasts or wherever else you get your podcasts. A final thanks to our sponsor, SoFi, to Sarah Fisher for joining us. And thanks again, everybody.